Kape! guys about ready? Good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a trader just like you. Been doing this for a while. I did a couple other things as well. So, hey, cool. We all bring baggage, good baggage and bad baggage, to this thing we call Forex. But I'm willing to share the things that I've learned over the years, in particular by making mistakes. Sure, I'm willing to share all of that. I try to combine technical and fundamental analysis. I think it's important to know both so that you can make informed decisions. Makes sense, right? Well, not everybody agrees with that. So, anywho, that's my point of view. Cool. Resources to point out. Trader's Way is a broker. That's an ECN. That means they don't trade against you. Sounds good, right? Yeah. Most brokers trade against you. That's how they make money. They make money when you lose. Trader's Way is different. If you value that symbiotic relationship, try tradersway.com. Hey, would you like artificial intelligence to look at 7,500 charts in real time and tell you which 3 or 4 are interesting right now based on trading plans, based on pure technical analysis? No fundamentals at all, just patterns. Cool. Get your name on the list. It does scalping, it does spot trading, it does swing trading. It looks at the 15-minute, it looks at the hour, the 4-hour, the daily. It looks at volatility from news events and tells you out of the 50 or 60 things that are happening this week, which 3 or 4 are going to give you not just volatility, but volatility with consistent patterns in them. I don't even know how much to charge for this service yet, but I'm going to launch it soon, and I'm going to ask you questions like, what do you want, what do you need, and how much do you want to pay? So if you want to shape the future of this service, put your name on the list. I'm only going to let people on the list sign up in the first iterations. Cool. QuantBox is the other side of the equation. Artificial intelligence that helps you do fundamental analysis of macroeconomic data. So you can very quickly discern what's the underlying intrinsic trend so you can trade with it. But also, what is the market doing right here, right now? Cool, right? Yeah, very cool. Like, insanely cool. Oops. Oh, sneak peek. Don't look at that. I suppose I can give you a sneak peek. Snip. I'll give you a little snippet. No, let me redo the snippet. I'll show you. It's not bad. In fact, it's quite good. You do a snip. All right, so you guys have seen the website quite a few times. So I just pulled that up, right? Okay. It's nice, right? And then where's my snip? Here's a snippet of the back office. show me Forex trades with a minimum probability of 60% chance of success. And here's the Forex radar. Yeah, it's real. Like, actually, that's pretty good, Wayne. Yeah, I know, right? Pound yen. Look at, see the targets and everything? The pattern, rising wedge, triangle, entry, target level, how long it'll take to get there, when the patterns were identified, this, right? I mean, it's nice, right? Probability, 67% chance. Forecast, 188.90. There's the pattern. There's the arrow. There's the target. Oh my God. But notice those are 3, but it looked at 7,500 opportunities to give you those 3. Huh. What's up, Supreme? All right. So anywho, that's going to come at you like a spider monkey. Please put your name on the list. Please put your name on the list. All right. So I got a lot going on inside my brain today. One of the things it's interested in is the Fed meeting minutes. And the other thing that is more concerned about than thinking about, more concerned about the NVIDIA earnings being released later today. And that's going to create some volatility. Okay, interesting. If you were going to be a bear on oil today, because it's been that way, well, yesterday was a bearish day, lower high, lower low, you could update your biased pivots to be bearish. Okay, and we are now in tomorrow's sell zone. So you're not interested in today. Today's already happened. It's over. I've always said if you log into New York and you're asking people, hey, like, what's up, fellas? What are we doing today? You've already lost all your money. You're already dead broke. It's going to happen. It's inevitable. If that's the way you think, that's where you're going to end up. We should be thinking about tomorrow. And we are now in tomorrow's sell zone. Right here, right now. Right here, right now. What do you stink? Smell like a plan? Maybe. If it's going to be bearish, well, that's probably how it'll go down. Morning, Maida. Maida. Boo, 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 boo. Maida. Boo, ba, doo, ba, doo, Maida. Yep. All right. So, anywho, what do you think? Kicking off those moving averages, lower high, lower low? Could be a rabbit, could be. Wow, my WTI. Zip over to the XAU, bro. Yeah. Well, neither here nor there. That's sort of my longer term point of view, and it's not happening. It's very quickly not happening, but it's very slowly not happening. Could it be risk off? Well, I've already analyzed that, Grumpy, and I'll tell you how I did it. I looked at, oops, delete. That's way too thick. I looked at the VIX. I looked at gold. I looked at dollar. I looked at yen. I looked at the S&P 500. 1, 2, 3, 4, 5. I'm missing one. Dollar. Oh, and I looked at yields. Okay. And I've determined an ever so slight change to risk off. But it's very sensitive. It's just barely. But it's gone from neutral to a little bit of risk off. In fact, I call it a -2 out of 6. So Grumpy Cat says, could it be risk off? Well, I've looked at that question and analyzed it and came up with an answer analytically, quantitatively. I can quantify through analysis of a basket of trades that have traditional correlation. So therefore, I can answer a question like that quantitatively. So it has nothing to do with like how I feel about the market. Irrelevant. Cool, right? Yeah. Well, that's how the Wayne do. That's how we roll. Huh? That's how we roll. This is how we do it. Cool. So anyways, yeah, just kind of waiting. What else going on in the world? On Natty, we had Natty coming down to 156, and then I expected some up. So now a couple more days have happened, and we got a little bit of up off my line. Oh, snap! And I had it going as high as back down to 223, but I'm also eyeballing this 2.0. Okay, eyeballing the daily 21, eyeballing next week's swing trade short. What? Notice that we're at the conservative bearish profit target for the week. For the month. So that goes into it as well. Bearish profit target conservative. It's nice that I have it written out in the English language, right? No hieroglyphs here. And so this is the MAR short zone. So maybe have it go up for a bit and then sell it off the 2.0. Could be a rabbit, could be. It's good to know these things, huh? Helps Grumpy turn that frown upside down. Dude, one of the cats that I adopted 2 months ago now, one of them I rarely see, but it's got some emotional problems. But anyways, he's mine now. But the other one, dude, this cat is so big that when he walks around the house, it sounds like a toddler walking around. You hear footsteps everywhere from a cat. Cats are quiet, right? Cats are silent. This thing sounds like a toddler. Like, dude, it's a big cat. And he's so smart, he gets bored all the time. You're like, uh-oh, this cat's going to be a problem. So I have 2 problem cats. Yeah, well, you know what? I wanted throwaway cats, and I got them. That's my contribution to the world. Let's take a look at some exotics. Why not, huh? No, it's not. It's actually skinny, Grumpy Cat. It's not fat. He's huge. All right. So anyways, we haven't made our lower low. This is my long-term trade plan going back a long time ago. And if you remember, we started selling USD Mexican peso around 24. 24. Dude, we're at 17. We started selling this at 24. I gave you an example of holding it 11 months or something like that. I made, does anyone remember? 1,000% return on investment on interest only, not even on pips. And then we did another one in here, did it another 9 months or something. But the original target, if you recall, when we were at 24, my original target was 8. And that's kind of like this, like what we're talking about now. Kind of that gets us down below 10. It's hard to imagine somebody talking about 8 when you're at 24. Okay. What is that, Jim? Grumpy remembers the carry trade. Yeah, it was good. Oh, a cat. All right. Nobody looks at cat pictures on YouTube. Who looks at cat pictures on YouTube? Yeah, all right. No, that's sure. Sure. Uh-huh. He's grumpy, though. All right, he's not that big. There's no. I'm telling you, though, my cat's got the same eyes. I can tell you that much. Weird yellow eyes. Yeah. Anyways. Yeah. Oh, I got this camera. It's cool. All right. Anywho. Yeah, that is a cat. Well, it probably isn't. Actually, it's probably not a cat. But anyways. All right. And so where are we now for the month for the exotics? Current high is M3. So the current target for the low of the month would be down here at 1668. But it's not going there very quickly. You'd need some significant risk on. And of course, as you probably know, I'm okay with the risk on, but I'm expecting risk off. And I'm expecting maybe more like that in the coming, weeks. Okay? You know what I'm talking about? And then maybe a breakdown next year, between now and next year. Okay. Sideways is okay with the carry trade. Sideways is actually wanted. The reason for it is, you probably wouldn't expect that. If you've never been on a lot of carry trades, like if you've never had 100 open trades before, you wouldn't get it. You're like, Wayne, why would you want sideways? Wouldn't you want this to be dropping like a ton of bricks? Yes, but it wouldn't be a carry trade because the The point of a carry trade is to not ever take profit. But your pips are worth way more than a carry trade. So at some point, the pips are worth so much, you'll need to bail on your carry. Now, if it's moving sideways and slowly down, very, very slowly, so if it moves sideways for a year but never knocked you out of break even, so you're never really making any pips, maybe you do for a while and then it gives them back up, but you never go negative. Let's say it just stays sort of mildly profitable pip-wise. Meanwhile, it's moving sideways. Well, now you're collecting the yield, and you're happily picking up the yield. And that's a proper carry trade where you're like, you never emotionally forced to take profit. You just kind of just sit and collect money. And that's better. Let's take a look at what else. How about foreign stocks? Let's do foreign stocks as we wait for the Fed meeting minutes. I think is going to be dominated by all of that. Remember the Chinese stock market? Yeah, I bought it again. Oops, I did it again. I played in Hong Kong. Oh, baby, baby. Yeah. Yeah. So we'll see. You knew I was going to do it. You knew I was going to do it. Yep. Denise says that looked like a Maine Coon. I'm sure. Yeah, mine is 20 pounds. I have a 20-pound cat. I mean, it's weird. Like, you hear him like, broop, broop. Oh, here comes the cat. Yeah. He's funny, like when he walks down the stairs, he can reach to the second stair. Like he skips every other stair, you know? You're like, dude, that's a big cat. So anyways. But he's not that big. It's not the size of a wolf. Yeah. All right. So anyway, so what do you guys think about this Hong Kong stock market? Is it going to work out? Is it going to be up now for the rest of the year? What do you guys think? When are we going to make a break? Well, one thing to answer that question is you're probably going to need to get above. Hang on, I'm trying to make this it's still a little helpful, I guess. I'll just get rid of the red one. All right, so and we have not made it above resistance, but at some point in the future, it could get interesting, right? Like if it started doing this, at some point it could be up for, definitely a long time, right? Where we breach this trend and we do the uptrend. Okay. So again, it's a risky trade. It's a knucklehead trade, right? I did, Grumpy. I did. At about where we are now, actually, at 75 or 85, something like that. I think very soon after your customer. So 4:15, 4 o'clock. Okay, so we'll see. I had this, I think, about the same price, and then got knocked out of break even. Waited for a double bottom higher high. Yeah, I guess I should explain the entry. Sorry. I mean, you got to ask more questions. All right. Down, up, bottom. Is that going to be a double bottom? Higher high? Now what do I do? WWWD. What would Wayne do? What did I teach you? Okay. Buy a dip, right? Pachow. Okay. So now I don't know if it's going to continue, but if it does, I'll probably do all right. Okay. So China said last night that they're changing the rules in which you can buy or sell at the open and the close. Whatever. They also, did you notice they cut interest rates by 25 basis points? That's actually quite rare for the People's Bank of China. They normally cut the reserve requirement ratio, which is the amount of cash that commercial banks are required to keep on hand. Now, if they are not required to keep them on hand, then you can then loan them out. So it's very indirect and it's credit related. But now, instead of cutting the RRR, they actually cut the interest rate. But I think it was the prime rate, not like the equivalent of the Fed funds rate. So the prime rate banks can charge to their best customers. So credit lines to the biggest Chinese companies cut by 25 basis points. All right, well, once again, it's something. Is it dramatic? No, otherwise I'd be, astronomically profitable. This is like barely profitable. No, but see, I don't think that would be that's not a mortgage rate. So mortgage rates would not have been cut. So they're trying to support the stock market. And in this case, Alibaba could borrow money for a little bit cheaper and therefore be a little bit more profitable, but not a property developer. You see? So they're trying to target it in their own way. And then today they changed some rules. I mean, I don't know. I guess they don't understand game theory. But in my humble opinion, I'm not sure what they did. But here's what I think they might have done. But I might be terribly wrong here. They said, let's say at 8 a.m. and at 4 p.m., let's say, I guess that should be 9 or 4. Let me change that. I'll even say 10. Okay. You cannot, let's say the old number is 9 a.m. and I guess I'll need to change this, 3 p.m. Okay. Let's say the stock market opens at 9 and closes at 4. Of course, you could buy anything you want at the open and sell anything you want at the close. Well, apparently China's changed the rules and they're like, no, you can't do that at 9. You can't do it at the open and at the close, but you can do it in between. So to me, it just changes the game where you're now, if you intended to buy at 9 and you're not allowed to, well, you'll buy when you can. If you intended to sell right before 4, but they changed the rules to 3, well, then you sell at 2:30 instead of 3:30, right? So I'm like, I'm not sure what they did, and maybe I didn't understand what they were doing, But game theory says if you're going to front run the close, you're going to front run the new close. Whether the close is at 4 or 3, you don't really care. So I'm not sure what they were doing there, but I probably just don't understand. I mean, I guess I could Google this sucker. Can we do Bloomberg? Oh, let's see. Let's do Financial Times. I'll accept their cookies. All right. Oh, this one is saying specifically quant trading. Is this right? Is this 8 hours ago? Guess so. Okay. Stock exchanges in Shanghai and Shenzhen. Been to both towns. Shenzhen's nice. Announced late on Tuesday that all market activity by, I didn't know that, by computer-driven quant funds, which rely on complex automated trading strategies, would be closely scrutinized under a new monitoring scheme jointly run by both Boris's and the China Securities Regulatory Commission. New quant funds will be required to report their investment strategies to regulators before they begin trading. The rule will also apply to offshore quants trading shares through Hong Kong. Is that me? Okay. The move marks an escalation of official efforts to combat a protracted equity market sell-off. So they're blaming quant funds. They're blaming quant funds for ruining their otherwise awesome stock market. Well, how about the collapsing economy? That might be doing it too, huh? Okay. Both Borises focused on the company. Some Chinese fund managers privately questioned regulators focused on the first minute of trading. So I said the first hour. It's actually the first minute of trading. And said the move was likely to be a desire to slow the pace of selling. Well, that should do it, everybody. Your customer says, what should we expect from the FOMC minutes today? Good question, but the thing is I answer it every single day. And I've talked about it every day for at least 6 months straight. So here's what we're going to learn. People that thought cuts were coming are going to learn that they were wrong and they should have, paid more attention to reality over the last several months. So what I'm trying to say is you should expect everything that you already expect your customer. You should already know what's in that. It's not an unknown. Okay? You should expect exactly what you would expect, assuming you've quantitatively analyzed the reality of the U.S. economy. And you also actually listened to the Fed in all their speeches, and you've actually incorporated the dot plot into your analysis. Okay? You're a customer. So if you did all of that, it's exactly what you would expect it to be. There's no guesswork. So How many cuts are we going to have this year, for example? Does anybody know? How many cuts are we going to have this year? No, you don't need to guess, Stefan. It's a known number. Let me restate the question. How many rate cuts has the Fed told us? Okay? I'm not interested in your opinion. You don't run the Fed. It's not your decision. Okay? The answer is 3. So the answer is 3. What do I expect in the meeting minutes? That it's not 6, and it's not 5, and it's not 4. Now maybe it's 3, or maybe it's 2, but it's not my decision. They will update their summary of economic projections on March 20th. And then I will update QuantBox so that we can graph it and do comparative analysis of other central banks around the world as they change their economic outlook and interest rate projections. And then we can do comparative analysis so we can set up currency trading properly. Okay? And everybody can argue what they think is right. I don't even think that that's the right question. What they think is right is irrelevant. Okay? I'm not a master debater. So I just let the Fed tell me what they think. And then I watch the data to see how it changes, and I say to myself, does this align with what the Fed is looking for? Which, because I also have that plotted from the summary of economic projections. But I don't radically change my point of view until the Fed radically changes its point of view. Okay? So it could be 2. I think 2 is reasonable, but that's not, and I don't think it's 4, but what I think is irrelevant. Okay? Okay, now Sal says, Wayne, the 10-year Treasury yield is showing a lot of strength. How will it affect everything? It doesn't affect everything. Everything affects it. So what I've been explaining at QuantBox, by the way, QuantBox, all you have to do is pay money. Do you understand? All of your questions are really good. You should know all these things. Okay, QuantBox is not even $100 a month. Okay, and you see all these things, all these tools. That's not even all the tools. It just got too big. I've added more stuff than this, and I'm about to unveil even more stuff. Okay, look, it's not even $80, and you can trade like an institutional investor that spends thousands of months on like Bloomberg, but then they hire quants, which cost hundreds of thousands of dollars. Dude, this is $80. Just join. Just pay the money. Right? So here's what, one of the things we talk about every day, and we'll talk about what you're showing. Let me log into the database, because QuantBox is a database. It's not a website. Any idiot can have a website. Okay, and we're watching yields change. And this is what Silly Sally's talking about, the yield here. So what I talk about a lot at QuantBox is the changing of the yield going from 3.85 to 4.0 to now 4.25. What does it mean? Well, that represents the market getting on the clue train that they were arrogantly and grossly incorrect with their stupid assumption of 6 rate cuts. Now you're like, now that makes me sound arrogant. Well, back in early January, I did a 2-hour presentation trying to look for evidence that would suggest 6 or 5 or 4 cuts are coming. I spent 2 hours going through all the economic reports that I pulled directly from the Fed, and there wasn't even one iota. Not even one iota. And I don't even know what an iota is, but I couldn't find an iota of how you would get to that conclusion unless you were just either a degenerate gambler or guessing. I think the market was just guessing, which scares the bejesus out of me because these are institutional investors playing with your money and they don't have a freaking clue. So, cool. So I go back to this, and this is pricing out of the cuts. But now think of this. Has the economics actually changed? No. Has the Fed policy changed? No. But the knuckleheads managing trillions of dollars have realized how dumb they were earlier in the year. Now they're swinging back the other way. Oh my God! Now I even hear the Fed's going to raise interest rates. Dude, how could you possibly trade and invest like that? Where one day there's going to be 6 cuts and the next day, no. They're going to raise interest rates. They're going to raise. And I'm like, oh my God. Oh my God. It's crazy, isn't it? Okay? Amazing. Oh my God. So you need to have information like this in front of you so you don't get suckered into that noise. I think you're being played. If you watch TV to get your information, you're being played. You're somebody's sucker. You know, when you get invited to a poker game, the thing you're supposed to do is look around the table and try to figure out who the sucker is. And if you can't see it, you're the sucker. You're there to lose money. You're there for other people to make money. That's why you were invited. So if you look to the TV to get people's opinion, like, oh, what do they think about the Fed? Oh, I think the Fed's going to cut 6 times this year. Blah, blah, blah. Oh, my God. You're the sucker. Blue Horseshoe loves Endicott Steel. Huh? The Wall Street Chronicle? Uh-huh. Okay? Do not watch TV for trading advice. Don't watch YouTubers for trading advice. Okay? This is why I'm unpopular. Don't listen to YouTubers for trading advice. Okay? Can you imagine if YouTube announced a policy that you can only be a financial expert if you have a master's degree in finance from a top-tier university, 20 years of experience, you've traded over $1 billion in a month, you're licensed or registered, you passed a Series 3 or a 34, or maybe you've done a series, an SEC, Series 7, or just like some basic requirements. Dude, there'd be no YouTubers. Okay, there'd be what? You'd be down to a handful of YouTubers if you were required to be licensed and registered, actually educated, and have a minimum level of experience. Anyways, So don't listen to anybody, including myself. I'll push you in the right direction, but I'm willing to be unpopular if that makes you successful. All right. No, I know, Sal, I didn't say that the licensed people were on the clue chain. I also said the people on TV that manage billions of dollars, they're licensed, they're registered. But you have to have a basic minimum requirement. So what percentage of YouTube gurus have the mental capacity to be an A student at Harvard studying finance and economics when their professors are world-renowned economists and financial investors? Like none, right? They just can't, they're not smart enough to do the work. Or they're smart enough to do the work, but let me tell you, it's too difficult. 99% of the people that applied for my program were rejected because they didn't have the background. So they were vetted out. Now, of the people that were put in my program, 50% of them failed because they were not good enough. So it's just like, dude, like think of like life experience being the vetting process, the filtering process. So at least, you know, like the licensed people are not licensed to be geniuses, right? It's just like, at least they're tough enough and smart enough to do, like, to get the actual license. It's just a weeding out process. Right? Like, if you can't do that, don't talk to me. Okay? That kind of thing, right? Anyways, whatever. Don't listen to me. Don't listen to me. Let's do some dollar. Let's do some buck. So again, okay, cool. All right, so we're moving up again. So we're in day one of a 2-day move. Does anybody remember this trade that we have going on here? Yeah, that's the trader's trade. Our volatility radar, okay? Our volatility radar, huh? There's our target, our minimum target. Okay, check that out. Up and over. Okay? But it also suggested, so it's been 1 day. Or wait, no, that's last week. Sorry, I forgot this was 4 hours. Sorry, that's last week. But that is another TRADARS trade. All right, the second one was yesterday. There we go. The second one was yesterday. We were down here, and I wrote down 80% chance of up. Can anybody confirm that? We were right here as a red candle. How many people can confirm 80% chance of up? Okay. So it popped up on the news. It came back. And now we're trying for up. Today's target is here. And what it suggested is, okay, probably should last 2 days. Can anybody confirm up and then 2 days? 2 days, gonna be the day, gonna bring it back to you. Right? What do you think? Yeah. Cool. Well, we're not there yet. It's only been 24 hours. But it did make a higher high. Okay. So if you add it to your technical analysis, not just do what it said, because that would be dumb. Mama didn't raise no fool, right? So you're like, well, it just makes me even more bullish. So this is a daily buy zone. We knew that. This is a 21. We knew that. That's a higher high. We knew that. That sets up a higher low on a rule reversal. We know that. Then it made another higher high. Then we look right and we drag this, which is tomorrow's buy zone. And we try to climb up, and then we have our target here, and that would be the winner chicken dinner of 48 hours to the up. So how much should I charge for a service like that? I haven't even made that decision. Okay? It was the scalp. That's what I'm saying. That's just a new scalp. The volatility was on the calendar before we even got there. You can even set it up. I even showed you. You can set it up on your Google Calendar to give you an alert to get ready to show up for this high volatility event-driven strategy. Okay? Now, Helena says 137. It's not a target. It's not a price target. That's the thing. This is a volatility play, and it analyzes how often it goes up based on a miss, an as expected, or a beat. Does it go up or down? And over the last 12 months, how many times did it go up? How many times did it go down? In a 1 hour period, a 2 hour period, a 4 hour period, a daily period, and beyond. And all it said was, in this situation, 80% chance of up between 2 hours and 2 days. Price target? Well, it doesn't know that, because if you go back in history, well, it was all, if you look at the Canadian inflation report, 9 months ago, well, it was a different price. Now you could say, well, you can do, average pips, and then you're overdoing it. Okay. It's not going to think for you. And I'm not saying that's what you're saying, but I'm just reiterating that it's like, dude, this pattern with this volatility around this particular event, we see a pattern in how the market reacts to the news that suggests 80% up. Now, it needs the volatility, but it also needs the pattern. Now, there's a lot of things where you could overdo the analysis to make patterns that don't actually exist. So you don't want to overdo it. You don't want to say, well, 80% chance of a certain amount of pips, because look at this. I could say well, there's a 100% chance of 2 pips, 100% chance of 3 pips, 0% chance of 1,000 pips, right? At some point, dude, just do your technical analysis. Write it up, move your stop. You still got to do the work, but under these circumstances, if you wanted to short, maybe you hesitate on your short. Right? You see what I say? Ride it for 2 weeks. If it keeps going up for here, ride it for 2 weeks. Don't let it limit you by saying 137 or 136. Hey man, it could be 150 where we're going. So move your stop, manage the risk, do your price action, identify your support and resistance. Of course, now, as we move into the future, remember, traders.co only looks at price and time. So it thinks everything is in the price. So really, Helena, this is going to go up until it stops going up. Yeah, Estelle says there is no target. There is no target. It's going to go up. Now, it's going to keep looking for bullish patterns and bearish patterns. Okay? So it'll keep going up until when? Until it does bearish patterns, right? So a way to look at it that way is it's going to go up forever and ever and ever and ever until it stops going up. And then traders.co is therefore going to see bearish patterns. And then it'll say, ooh, it's no longer bullish. But it can't think beyond just seeing what is happening. And that's okay, isn't it? Okay. And that kind of leads me to like, there's a sort of a premium upgrade that I'd like to launch when this gets going soon. And we're just a couple of weeks away. But wouldn't it be extraordinary that not only does it alert you to like a bullish pattern or a bearish pattern, but that it looks for a confluence of patterns on multiple time frames? Now that's the next level, because it then has to like see all these patterns. So it's looking at 7,500 charts, and it says, all right, here's the 50 that I'm interested in that are forming. Here's the 20 that have formed or are in play. And then it has to put that in like a memory bank, if you will. And then it has to notice. So imagine that's logic. It has to notice like, oh, it's bullish on USD CAD on 2 time frames with completely different patterns. There's an up channel on the 4-hour, but then there's a rising wedge on the 15-minute, and both are bullish. And it's just like, So I'm like, that's my next level thing. I'm like, yeah. Give me that. Hey, developers, give me that. Oh, too many plugs? Look, I'm just excited because this is what I'm working on, right? I'm like a kid with a toy. Huh? I'm like your brother with a new girlfriend. He wants to just tell you how amazing she is all the time. Silver. Okay. Silver. Okay. How do you want to handle silver? Is that a higher high? Is that a role reversal to you? What do you think? 21 above the 55, plausibly a higher high. Okay. Ever so slightly higher high, right? Ever so slightly to the up. So what do you think is next, guys? What do you think? What a beautiful trend, huh? Don't let it get away. Wonder if we're going to have a rollover on the monthly central. Gorgeous, huh? Okay, we're 2 standard deviations above a negative sloping mean. Well, Don, it's following the stock market, but once the stock market gets on the clue train, and obviously the meeting minutes and NVIDIA are the last sort of linchpin, and then we might go, and we're basically, after NVIDIA, like think of it this way, after NVIDIA, we're basically done earnings season, right? So we get through that, and we fizzle fade into the bottom of March, and then I'm going to buy it all up. I'm going to buy it all. I want it all. Right? It's like yelling at the floor trader, right? I want to buy. You're like, buy what? Everything. Yeah. Give it to me. Dow, S&P, NASI. I want it all, and I want it, well, not now. But, the middle of March, I'll probably start looking to buy. Catch a bid. Huh? People will sell and go away? Nice. Sell. And then I'll buy after the sell. I buy dips, so I'm looking for a dip. Okay, cool. And then I'm going to buy again probably end of September, early October. And I know it's not going to go up then, but I don't always buy because I think it's going up immediately. I buy because I'm accumulating. Okay? So I'm going to run 2 funds. One is an accumulation fund and the other one is an income fund. Okay? So if you're an accredited investor and you have $1 million burning a hole in your pocket and you want me to invest it for you, well, we have to look at you and say, all right, well, what are your needs, accumulation or income? And we put you in one of them. Yeah. Well, Ron, I don't know, but would it be irrational? No, because I actually went through that plan in November. So I rationally planned it in November, but I don't know the future. Okay, and I certainly didn't have the S&P 500 and NASDAQ going up in January to all-time highs. No. Okay. Now, I understood why that might happen. There was a couple of reasons. One, it had to do with the election. The other one had to do with the Fed cuts, which in January, I totally disagreed with. But if you thought there was going to be 5 or 6 cuts, then it makes it totally makes sense for the stock market to be going up. It's just like, there's no way I thought that. So that's how we got to where we are. Do I know what's going to happen between now and March? No, but I'm triple leveraged short the S&P 500. So I've made my stance. I'm holding my line. I'm doing what the Wayne said he'd do. Very cool. And so if, right, Don, if I get a decent pullback between now and then, I will do it. I will accumulate. Now, what does that even mean? Well, I put money aside in the past based on my trade plan, which was to buy, let's say, around the end of March if the market dips. So I actually have a pile of cash, a huge wad, right? Waiting for that opportunity. Because I can't get there and be broke. What's the point? So I have to plan, right? You see, I have to plan. So I have this pile of cash and I'm waiting for a dip. Now, my pile of cash doesn't make me any money. So while I wait for it to dip, I take the money and I triple leverage it and I short. Because I think it's going to fall, right, Don? So I'm like, well, if I think it's going to fall and I have a pile of cash I'm not using, well, I might as well use that. Short, make money on the way down, and then get out of my short and then gobble everything up at maybe an 8% discount, 10% discount, and then hold till I have gray hair. Wait, I have gray hair. Well, anyways, hold for a couple of decades, right? Cool. So would that be irrational? Well, that is my plan. And if I planned it, there must be some rationality to it. Now, of course, I've looked at things like seasonality, and this is not my first political rodeo, so I know how to trade the fourth year of election cycles. And all of a sudden, it's just, it's just what we do. Yes, Sal, I bought my first ever stock that I ever purchased was Apple, and I paid $6 a share, and I held it for many decades. Yeah. Yeah. So yeah, I will hold these for decades. Honestly, I think I'm required to take them out in about 25 years. I'm required to take some of the profits, but I don't intend to. So when I get to that required level, it'd be great if I was in a situation where I take the required distributions and I give the money to charity because I'm already making so much money in my 70s that I need a tax write-off. So I just donate the money that this money is making to charity. And maybe that gets me into heaven. But do like every other rich guy has done. Buy your way into heaven. Yeah. One of the very, very first mechanical machines, right, which is a machine, one of the very first machines ever invented was this machine where you put a gold coin into the machine and it spits out some holy water. Uh-huh. Yeah, honestly, it's one of the oldest machines ever recorded. There's another great one where I think it was the Tomb of Colossus. So now we're going way back in time. And these massive stone doors were probably like 50 feet tall. Like they weighed 5,000 pounds, right? Like probably even more than that, 10,000 pounds, 5 tons. There's no way like one person could open the door, right? That's the whole idea. So in the basement of this building, they built a steam machine. Guess what the steam machine did? It opened the doors. So, right? So a crowd would form outside, right? This is where colossal comes from, meaning giant, right? The Tomb of Colossus. So anyways, So it was a temple of Colossus. Anyway, so imagine the doors would open, right? 10,000 pounds per door. Both doors would open, and there'd be a little tiny man, right? The priest would come out, and it was proof he had the power of God. So you should leave some tribute, right? And I'm like, yep, well, that was one of the first machines. It was a miracle. Yeah. Okay, so let's move around. What else we got? Yens. Let's do some yens. Market's going to open pretty soon. Got to go. So I'm still in my CAD yen now for 2 months. 2 months. Still long my CAD yen. Okay, but now we've made another higher high. We've come back. We're retesting it. And we're in this zone of, okay, trying to kick off the daily 21. Will it happen? I don't know. But of course, the big news story, the big one, the doozy, okay, is this one that we've been tracking. Okay. And, you know, what did we have is that the absolute top line was 52, made it to 51. Okay. If it ever gets to 52, it's going to be so big. So here's the risk, everybody. Ladies and germs, members of the jury, okay, is what if it does that? Oh, shalakalaka. Okay. Sal says lot size. Dude, this is my coaching account. It's got like 30 grand in it. Like, there's no lot size. I'm just showing you technical analysis. Okay, but here we are on the 150. And oh my God, like all these red lines are like shields up, red alert kind of stuff. And you drop into a smaller time frame, you're like, yeah, it's interesting. These are very interesting prices. Okay. Now, pound is going up. How many people here reviewed the commitment of traders report? Right? Oh, Sal, it's only a mini lot. Like, this is my coaching account. This is nothing. Okay? But anyways, pound yen. Okay? How many people reviewed the commitment of traders report this week? No? Okay, then you need to pay $79 a month and join QuantBox. Okay, that's it. But you should know that there's money moving toward the pound. Now, Sal says you should ignore all the flows of capital by institutional investors into particular assets. And I'd say, Sal, I disagree with you. I think you should know the flows of capital by institutional investors into different assets. Yeah. Cool. Okay. Cool. There you go. You either know or you don't know, or you care or you don't care. That's to each his own. It has its limitations. Well, what doesn't have limitations, Sal? Right? Yeah. What doesn't have its limitations? It's like, dude, I mean, think of it. Money by not just hedge funds, but even things like insurance companies and endowments and, money is like when the COT shows money going to gold, it's not an opinion. It's not an assumption. It's not an algorithm. If they say 10,322 contracts went long, and during the same period, 2,314 bearish contracts left the market for a net change of 7.8% week over week, it's factual. We're talking about billions and billions and billions of dollars rolled into gold. And then you look at your gold chart and you're like, ooh, I see a higher high, higher low. Like, oh God, like you should know that you're trading with the institutional investors, not just sort of randomly in between their moves. Now, that might give you the confidence to let your winners run. But you're right. It's not always clear. And sometimes the money comes and then the next week the money goes. Yeah, it's a complicated market. But you should know. And in particular, when you're in peaks or valleys, right, in markets, but also mixed with some seasonality, where let's say the market is heavily long pound, but we're running into a part of the year where pound typically gives up its strength. And then you see the COT switch, like from no bulls were added, but bears were added. Then you're like, ooh, that's the big seasonal change. I expected bulls on pound to take profit and leave the market. And now I have evidence that it's happening. Now I can too adjust my positioning. But once again, like if what you do is log in, make 3 trades for the day, take profit or loss on those 3 trades and then leave, yeah, you don't need COT. You're just noise between the candles. Yeah. Now, if you're trying to be in trades for a couple of days, a couple of weeks, a couple of months, well, yeah, you want to trade with the institutions and you need to know seasonality for sure. Okay. Right? So if you're a scalper, you don't care about COT. What I'm trying to say is, if you're a scalper and you're pretty good, I can make you great. But you need to do more than scalping. That's it. And if you're going to trade institutionally, or like, let's say you just want a job, you want to work at a bank or a hedge fund, then you need to change your amateur ways. And I'm not saying you're amateur, but what I'm saying is if you're only short-term scalper like all these idiots on YouTube, you're never going to get a job. You're never going to manage money. You're going to stay small time your whole entire life because you're never compounding. You're never collecting interest. You're not playing the game institutionally. In fact, I was having a conversation about Forex with one of my hedge fund manager friends, and he was having a conversation with one of the big banks that provide him lines, right? Lines of credit. And just the idea of just trading spot like what we do, spot Forex, is almost like a foreign language to a banker. They're like, dude, you don't do swaps, you don't do futures, you don't do like, it's like, no, if you do swaps and futures, the underlying asset is the spot. It's like, I'm just trading the spot along with swaps and futures. And it was like, they're like, we don't get it. But like, how do you hedge off your risk? Right? And it was like, so what I'm saying is to institutional investors, like the big ones, what we do is so foreign. So like, if you whittle it down, I'm trying to teach you how to use technical and fundamental analysis. I'm trying to teach you how to scalp, but also spot trade, which is an intraday trade, how to day trade, how to swing trade, how to position trade, how to carry trade, and how to be in some trades for 3 or 4 months, not just 3 or 4 hours. And what happens is it moves you even closer and closer to being more professional. Right? Okay. So, right, and Sal, I'm not trying to prove you right or wrong. I'm just trying to explain my point of view. That's all. All right, guys. Well, the market's about to open. I gotta go. Wake me up before you go. All right. So, peace on earth. May the pips be with you. May your profits be above average. Please have a wonderful day. Trade safe. Hey, if you're in my day trading group, I can't meet today. I'm sorry. I have a family obligation that must be taken care of. I don't treat our relationship between you and me lightly, so it's an important thing that I must do. So I will see everybody in the morning. So let me repeat it. Peace on earth. May the pips be with you. May your profits be above average. Remember, Fed meeting minutes and then NVIDIA. Please be safe. That just happened.